All right, good day, friends. It's quite a good week for us. We got some trades that went very well, and I'll be doing some review on EU and gold, which is the pairs that I trade. But this is EU, and if you are watching this now, just sit closely, listen carefully, and you will get value from what I'm about to share now on how I took a trade, and it gave us some RRs, some rewards afterwards, and some persons took it on pro firm and they were profitable. So let's quickly go into what happened this week. So the market starts open this week at this price action candle. This is where the week started. But before we do a broad review, we need to go to what happened last week and the structure it has created for quite some time now. Are we ready today? All right, good. So this is what has happened in EU for some time now. EU has been bearish for over some month now, and also EU created some storyline last week before the close of last week candle. So this is daily time frame. So there's a break of structure which are marked here. A break of structure, a screen guard, break of structure, body close, and then we look into for the 4 hours to see where possible the trend is going to continue downwards. So let's move closely into the candles. Let's move closely into the chart and the story it's telling us. We don't assume the market to move in a certain direction, but we respond to what the market presents to us. Don't assume what the market should do to us, but we what respond according as the market has presented to us. I think you need to know that. So now, as I used to say, I trade supply and demand and SMC, which is smart money concept, and this is it. Let us look at what break the structure that broke the other block that broke this main structure at the daily time frame. This is the main structure that was broken, and we are going to pick this side as the candle that broke the structure downwards. Yeah, it has been retested, so it's somewhat this candle. Well, let us just pick the whole zone. So this is a zone, a supply zone, a supply zone. 10 years, okay, where the potential where our market can begin to reverse. So now you're going to see that the market went up, tagged into the zone, and then come downward, and then broke the structure with just a candle um open and close below that structure. So last week was telling me that, oh wow, it's time for us to start to sell EU, just giving me that hint before the close on Friday. So even though it swept above this eye, it swept above this eye, swept above this eye, telling us the money has been transferred to this place. Money was transferred from this point to this point because of the sweep of liquidity. So anywhere liquidity is where the money is in the market. So the money was transferred from this point A to this point B. So this is where we are interested in to sell the market further. And now let us dive into what it created for us and why we took a buy and took a sell during the week. So let's go downward to 1 hour. So yeah, 1 hour time frame now. You see what the market did there. The market went up swept to that place. The money is here. This is where the liquidity is. This is where the money is. A money transfer was done. So now, and for me, in my strategy for me to take an entry is that I must say significant break of structure. And what tells me the break of structure is when a pullback is being taken out. So this is my change of character. This is my change of character because there is a pullback at this with this candle. That means the candle was going up bullish, but at this side it swept below this previous candle here. So this is the pullback. So this is where the change of character telling us, oh, we are ready to sell. So this is what happened in 1 hour time frame, giving me more hints that okay, we are about to sell. So from there, knowing fully well that the trade is about to sell, and we closed at this point on last week Friday. I was expecting price to range into this zone so that I can short better, but funny enough the market did not get here, and the reason being that he created his own supply story at this point. He created his own supply story. Okay, let me say arrow. Created a supply story at this point whereby it has not broke this chalk, which is a change of character. It did this. So this is what it did, creating another supply story here. You can see. So this one has broke the structure that's 10 years change of character is about to sell. Then it took away this inducement here and came to target into the other block above here. Then boom. You see, right? So it went downward 10 years. Okay, a new bearish structure, has started on EU. 10 years, the next place or point of interest we should be interested in within this range, from this top here to this down below. But before I took this sell, I saw a quick buy that I could enjoy while it was time, and which is this place. It was okay. I'm not in need of this. It was neutral before because I chose this as a place, because if you see the same, it just rinse and repeat. Let your strategy be able to explain to a 7-year-old child. Are you getting it? This is what happened. So a break of structure happened here. The assumption that okay, we are bullish. Let us assume, oh, the market is bullish, so this is it. A break of structure happened here. BOS top. A break of structure happened here. So when the break of structure happened here, so it left some imbalance here. This is an imbalance that has not been filled. Some imbalance. Let me fix it there so you can see what I'm talking about. So this is imbalance here. Imbalance that was not filled by this candle. So this place, it was now the inducement, and from here it pushed up and broke the structure further upward. So when the market was dancing downward, shutting down, it tagged into this demand zone, that was created by this imbalance, this demand zone. Then it went up. So I took this trade, the buy. I took the buy from here to here, which gave us a good risk to reward, to this point, and that is 1:3, 1:3.53. All right, that's not our main discourse today. So so after I took this, when I saw the market approaching this supply zone here, I had to change this to my flip zone order. That demand is about to turn to rest. Demand is about to turn. Yeah, we should use resistance. I don't use support and resistance. But what it is here is that it came to tag into this other block here where there's imbalance. There was imbalance above this place, or we can call the other side. A inducement. This is our inducement. These are inducement, IDM, inducement. So you can see it just rinse and repeat. So now I chose this order zone at from 30 minutes. From 30 minutes, let's look at that. So this is a top-down analysis, how you can take your trade, how you can be confident in the trade you are taking. This is this is how you can be confident in what you're doing. It's just rinse and repeat. Are you getting it? Where you need to see your inducement, where you see where the money is being transferred, where the money is being transferred. So same likewise, as I explained with those arrow, that money was transferred from year to year, telling us this is our latest supply liquidity. So money was transferred from year to year, and now this one also mitigated that candle. It mitigated. I was explaining to someone that he told me how did I choose this zone as a place of reversal. This candle here mitigated this candle here. Okay, let me use an illustration. It here mitigate here. It mitigated here, and this candle that was mitigated also mitigate this. You can see. So this is all these are mitigated already, and the last unmitigated candle was the where I chose my zone and where the market also responded at this place. The market responded at this place. So let us move quickly. So the market then came. This is just what happened. All right. All right, took the inducement upward and come here, then the last mitigation, the unmitigated part. So this is it. So it gave our inducement where we have an imbalance upward to be filled with the market. So the demand pushed the market upward to this zone. Then a certain I told someone that when he was saying I should do a review, I said this market certainly must break a low. It must break a low, and that's why I set my TP. Realistically at this place. I set my TP here because I know that the market must break a low. I set my TP here and it hit 1:6, about 1:7, 1:7, and which the low that it broke essentially was this low here. You can see how the market works. This is a break of structure, a certain break of structure here. A certain break of structure down. So because the market over the week has built up itself over time, and when the market has built something like this, transferring orders, money was here before. The money was here before. Was there before, but it was transferred into this place because it was the one that broke this pullback, which was turned to our change of character. Then it pulled back and tested that place and telling us that okay, it left an imbalance, telling us that the market is to return here. Then the market returned, then boom, it had to break the structure. So this is how we were able to take 1:7 here and 1:3 here, which amounts to about 1:10 in this week on EU. 1:10 means that if you are risking $100, you're getting $1,000 in return on your pro firm, or if you're risking a $50 account on your pro firm, you are getting $500 in return. And I think that's quite a good return or risk to reward ratio whereby Forest can give you. So before the week starts on Monday, we are going to be I will be sharing to us the possible trade entries or direction. Don't put it, the possible direction the market is going to move for the week to come. So stay well, stay connected to GoFX Up, as I'll be dropping some updates that you need, and also be sharing my view of the market. So go also to go and go and watch gold that I'm going to be releasing now. and also which I released for last week, and see the direction of the market and the reason why you need to take the buy and the sell that happened. So, shalom, peace.